Today we're talking about how to buy back your time using your own bank, okay? And we want to get real clear. If you hear that for the first time, you go, never heard that thought, that we're not proposing some magical thing that's new. What we're really always talking about is whole life insurance and paying premiums with a mutual company that has returned or been profitable for 100 plus years consecutively. Anytime we talk about being your own bank, that is a behavior, a mindset, a concept associated with how money is already flowing through our lives.
Simplest and probably the thing that most people think about is real estate. You go buy a real estate property, you get a mortgage, down payment, and let's say that it was $60,000 for your down payment and your mortgage payment was $1,200 a month, but you rented it out for $1,700. Well, that $500 difference between the rent and the mortgage payment comes back to you as the free cash flow, as the cash flow, and that's what creates it as a cash flowing asset, or what we like to call cash flow.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome back to Cashflow Legendz. We've got our main man, Brock, back with us today. Nate, I don't know about you, but I really miss when Brock's not here. We were talking before we hit record about, and I want everybody to understand this when they listen to us talk about Brock. We love Brock, but Brock is the only person in our life, this is a compliment, Brock, that when we show up, we almost expect to be called up. But Nate said something that made me die laughing. Nate, you want to say what you said about the thing about when he calls you up, you're not sure if you don't know him well?
Oh, yeah. Well, I told him this already, so this is not new information. But I said, there are some times when I have no idea if you are being absolute serious or super sarcastic.
Yeah, it's a problem I'm working on.
Okay. All right. I have a thought, Brock, on why you might be aware of working on that now, and we'll just leave it at that. But
it is it's my family, my soon to be, and my future brother-in-laws. They joke about it all the time.
Okay. It would make you
at dinner. They will mock me because I'm always like, man, this was really good food. Thank you very much. And they just laugh, and then they'll say it too, but with a different tone. And so it's we're working on it.
Just because most people listening have no idea who your family is, do you tend to favor your dad or your mom in that? Yeah.
I don't think either of them. I don't think either of them do that. They're both very personal.
Okay, so like the most common characteristics that you carry, do they come more from your dad or more from your mom's side?
I think it's a little bit of both. If you watch my mannerisms and you listen to the way I talk, more my dad.
Yeah.
Like it's a little weird, our mannerisms and how similar they are. People joke about that sometimes, but that's cool. We I don't know if you guys saw it on Instagram, but the or TikTok or whatever, the PGA does the PNC tournament every year where like you play with a family member, and they have just clip after clip after clip after clip of like a parent and a child doing the exact same thing, the exact same way at the exact same time, or like just right after each other. And it is wild how similar we are to parents.
That's cool. It reminds me of what they tell you, what you learn when you have lots of kiddos. Like, Nate has 4 in his house, and Nate, right now they're all back around the house, so you're seeing them fairly often, right?
Yeah, I got one that is about to move out, and it might be the last time he moves out. But the other 3 are under my roof for the time being.
There's a clear example of that, Brock, where we say they don't do what we do. They don't do what we say. They do what we do. because you will see them as you and your soon to be one day down the road, if y'all have kiddos, you'll see them do something that you do. And
More
it is
taught than taught.
Yep. And it is eerie because there's no denying who it came from, especially if it's not endearing.
Yeah.
And then you get the eyebrow raised from the spouse.
I was having a conversation with somebody this week, a friend and one of our members, and topic of my dad came up. And sometimes I can hold it together when I'm talking about him. Sometimes I get choked up. But what I told him, in that time I got choked up. But what I told him was, I get glimpses of him every day when I look in the mirror because I look so much like him.
Yeah.
And it's just kind of a cool gift. But several years ago, there was an app that came out. I think it was called like Face App or something like that, where you could basically age yourself.
Yep.
And so I aged myself to like 70 years old or whatever. And man, it looks so much like my dad. It was crazy. I was like, oh my gosh, that's my dad. So anyways,
I'm trying to figure out how we can connect the topic to what we've been talking about, because that wasn't the plan. We'll see how well we do. So
sometimes there's no segue.
There's no segue. I do think there might be one here, but it'll be a stretch, so I won't even try it. So today we're talking about how to buy back your time using your own bank. Okay. And we want to get real clear. If you hear that for the first time, you go, never heard that thought, that we're not proposing some magical thing that's new. What we're really always talking about is whole life insurance and paying premiums with a mutual company that has returned or been profitable for 100 plus years consecutively. Anytime we talk about being your own bank, that is a behavior, a mindset, a concept associated with how money is already flowing through our life. And we're just being very intentional on where it goes, why it goes there, and how we use it from there. So there's no magic, there's no, fairy dust or nothing like that. This is just a sounder way for money to flow through your life.
We are operating like a bank. We are not replacing.
There you go. Yep. And one of the things that I say that has helped me connect that dot, Brock, often is, until I learned how to operate like the bank, I was not aware that I was being used by the bank. And so that created a shift to where now I have more awareness of how to use the bank to my advantage instead of being used by the bank. And when all those things start connecting, we get to have questions and conversations geared around today, which is, what does it mean to buy back your time? And I think we have to start at a very foundational level, because Brock, your ideal prospects and leads and clients probably often have already figured out how to make large sums of money, oftentimes. So buying back their time looks different than most of Nate and I's typical clients at first, which is more on the, I've got a set amount of income. I don't really look at my household income like a business. Mm-hmm. So we're at different phases, but what's really unique, as I've done this longer and we've talked more, is often our ideal prospect mindset wise and your ideal prospect mindset wise are having some of the same hurdles to jump over.
That's right.
Just in different seasons of life or different areas. But many times our ideal prospect is trying to understand how to make their money more efficient, and oftentimes getting into the business owner realm. Not always, but often. And understanding this on a personal level allows that to happen. And so today we're going to talk about, what does it mean to buy back your time with simple movements of money. We're not going to overcomplicate it. We're going to keep it high level. But the first thing is we have to clarify how we make money. There's only two ways. We trade time for money. Our money works for us. Would y'all agree? Or would you add something at a high level?
I think it's fine.
Yeah. So we either trade time for money, or money works for us while we're sleeping. And when you guys hear that, Nate, take me back to, maybe when we started this. If you were going to make more money, how are you going to think through that before we ever read Becoming Your Own Banker, before we ever did anything else? What was going to be your kind of thought process on, well, I make this much now, I need to increase income by this much. What am I going to go do?
Well, I had a full-time job at that time that relatively had a ceiling. It was capped as far as what I was going to be able to create there. Um, and so for me, when I really started recognizing that I was made for more than where I was, um, I started brainstorming just different quote side hustles, ways that I could add on to my full-time income, add on an additional layer of that. And then the hope was to eventually be able to replace that full-time income and in doing something that really I felt, called to or felt like a lot of purpose in. So creating more income was doing more.
Yep. That's where I was going. Trading more time. Now, Brock, you've got that fancy degree. Can you ever make more time in a day?
No, you cannot.
Okay.
I mean, some people could. They could wake up a little bit earlier.
Yeah. Oh, yeah. Can you expand past 24 hours?
Probably expand their time when they say, "I don't have time." I don't know about that one.
So I'm trying to stay on track, Brock, and you got me thinking about the miracle morning, and I completely agree. So a side note is that if time is our most valuable asset, that actually goes in perfectly. If we recognize that time is our most valuable asset, if we recognize that, because that's one of the first pieces, isn't it, Brock? Even with your clients that, have lots of zeros on their income, there are many of them that are trading time for money still, and they don't know how to get out of the business so they can work on the business. Would you agree with that?
Agreed. Yeah.
Okay. And from a money flow perspective, how can paying premiums to a whole life a whole life policy with a mutual insurance company, how can it create the ability to buy back time at a high level? How would you articulate that?
How could paying premiums at a whole life? What I would say is the only way that it would be able to do that is you borrow against the cash value to buy an asset that produces income to go do something else with. Like I don't know if a lot of people know kind of the differences in some of our views on,
Yes.
infinite banking and how that works. But like, I'm very straightforward in the fact, like, I do not use my policy's cash value. I don't borrow against it to give money, pay my tax bill, or pay for like everyday life expenses.
Yep.
The only way that I would pay for everyday life expenses from a whole life policy is if I utilize the cash value during my retirement years. My main goal and my only thing that I really utilize my cash values for is to purchase and acquire cash flowing activities or something in the business that will generate more revenue. Right. And so for me, the only way that I can see utilizing the cash value to buy back more of my time, or the whole life policy to buy back more time, is to borrow against cash value and either generate more revenue in the business, whether that's hiring a marketing team, hiring, buying a software or a podcast studio, whatever it may be to increase revenue, or buying like a real estate property that's going to bring back more cash flow into your world.
Yeah, if we're truly just talking about time, then the only way then that time can be bought back is to create efficiency with the time that you have, and expanding your business, getting people plugged into places that take you out of some of the work that you're doing or something like that. So
all right, Nate, I'm going to push back on both of you guys a little bit. I disagree. This is why I disagree. I don't disagree with y'all's point of view. I agree completely on borrowing against your cash value, creating assets. So what if I said it this way? Just by paying premium, I know I'm putting my dollars in a place where the cost of doing business for that product goes down every day. It becomes more efficient. while the efficiency goes up. Is that fair to say with a whole life policy and a mutual company?
As you pay it, it grows. Yes.
Yep. So having 15 years of experience paying into things that weren't whole life policies, there was no guarantee that my dollar was getting more efficient in most of the places I kept my money. For example, if I saved it in a savings account, it was being eroded by inflation. If it made money, I had to pay taxes on it. All right. If I kept it in my 401k or 403b or teacher retirement system, there was no guarantee that I was going to get a guaranteed increase in the asset accessibility or ability later. Even as I'm accumulating, there was no guarantee that I was going to be able to predict the taxable hit it would take depending on the product when I pulled it out on the harvest if I kept it there. But when I pay a premium into whole life, I already know those guarantees based off of my behavior. So to me, when I think buy back your time, I think, where does my wealth reside first? And if I can pay as many premiums as possible or as much, I'm doing in my world now, I am much more at peace with knowing that gives me a better chance to buy back my time with how I begin to become our own banker in our business and in our life. Because the dollar gets stronger and stronger and stronger every day, guaranteed. So, like Brock said, he's working with business owners a lot. And so I completely agree. If he can show them how to take the ability of their income earning potential and leverage it with a policy loan against the cash value and bring back more assets, that's going to buy back their time if they know how to handle it well. I would make the strong statement from all of our interactions with households who aren't business owners, one of the best things they can do is pay premiums and get better and better and better at how to understand what's happening in banking and how to start taking that over. Sometimes it may be financing all the vehicles for the family. Sometimes it may be paying down debt on 20, 30% credit card for the family and repositioning that cash flow back to them.
So hold on, Brandon. I think as you're talking, one of the things that I think that we should do is define what buying back your time means, because
yes,
I believe when I hear you speak, what I hear is you are setting yourself up for the ability to buy back your time. Because when I think about buying back your time, you are taking capital, making it or paying it to a job somewhere so that you no longer have to go do that thing and you can spend your time elsewhere doing something else.
Yes.
So
yes,
it's like, I don't know where you were going with that last point, but like using the policy to pay off credit cards or car loans, whatever else, that doesn't do anything to buy back your time. Does that create more efficiency with your dollars overall that you then could take more because you have more and buy back your time? Yes, but I don't think it actually buys back your time, because I think one of the funniest things that some of my friends make fun of me for is like, I love mowing and doing yard work and mowing the yard. However, I don't do that because I could pay someone $50 to mow my yard, but in that same hour, if I could make $1,000, well, if I cut my yard, it doesn't cost me $50, or it doesn't. If I cut my yard, I don't lose.
You don't save $50.
I don't save $50. I lose 1,000.
Yep.
Right.
Whereas, so said another way, would you spend 50 to make 950?
Yep. That's the way that I think about it.
Yeah.
And how can you remove things? It's kind of like Dan Martell's book, where it's like, what are the areas in your life that take energy out of you, or things that you do regularly every day that you could outsource with the capital that you have, so that you could either be more present with your family, you could work more on your business, you could do other things within your community.
Yes. I would 100% agree. And I'm glad you brought up that point. A lot of times with our members, we call members clients, members, they are when they begin to pay premiums and see how to take over the function of banking, they get more confidence because they're gaining back control of cash flow, which is the control of cash flow then leads to, and then what? Because that can then buy back time. So I love your point. And Nelson used to say often, my dollar's going up whether I'm sleeping or working or on a vacation. What he was referring to is when he pays premium, that locks in the guarantees on those dollars. And that's what he was saying. What Brock's saying, and I agree with completely, is to buy back your time, you have to use something called leverage at some point. And like Nate said at the beginning, you can only leverage so much of your time for more money. Like you can't work 24 hours a day. I'm doing a lot of studying on the Sabbath and rest right now. And there's a reason God designed us to rest.
That's right.
So that we can be aware of the God we serve, because we can't do it on our own. And we don't need to think we ever can. So Nate, maybe make a comparison for if somebody came to you, let's say it's a new listener, and they're like, hey, how help me make the leap. Maybe they hadn't ever come here and back to you yet. Help me make the leap how paying premiums can allow me more certainty to eventually buy back my time or have more choices to do something different in the future. Like, what are some key things that they have to make the shift in simply? And I want you to try to explain it like a kindergartner could understand it.
Okay.
Not one of our clients for 10 years.
Yeah. So let me simplify my language.
Okay.
So I think the first thing is understanding that there's only a few different places where we can put money to keep it protected in the best way possible and keep it efficient in the best way possible. Okay. So the reason why paying premium can be so important, and again, we are talking about a very long time horizon. This is why Nelson says, number one principle, you got to be willing to think long term. So if you're thinking you're going to be jumping into a whole life policy to do something, and then you're going to abandon the whole strategy overall, then you should figure out something else to do. But if you are locked into this idea of thinking long term and understanding that this is going to be a lifetime process, simply put, we're talking about preservation of our money, and we're talking about the control of that money that we are preserving.
Okay.
Positioning ourselves where we have access to those dollars for future opportunities or future emergencies. Because like James Nethery says, the two greatest frustrations you'll ever face in your life is when you have an opportunity you don't have the money for, or an emergency you don't have the money for.
True. Agree. Brock, what would you add to that, if anything?
I think that's fine.
Okay. So let's give a practical example. And I want to start with this framing on buying back your time. When we visit with anyone about their pain points in their business or their household, okay? So when I say household, I mean more of one of our, we have business owner clients, but a lot of ours earn an income in their W-2 starting out. So they first have to recognize and lean into the idea that this money is already flowing through their life. That's the first piece. And they are only keeping a very small percentage of it to work for them forever. So I described it yesterday on one of our calls with our clients, a husband and a wife, and we love visiting when husband and wives are on the same page, because it is a blast, because the momentum gets built really quick. And I said, just think about these premiums you're paying as energy. And the minute you pay a premium, you are protecting, preserving, and allowing yourself the opportunity to reuse that energy over and over and over again as you get better at how you want to use it. Like Brock said, if they're a business owner, they may take a policy loan and go buy a cash flowing asset, or they may take a policy loan and go buy equipment for their business that they know creates a return that will pay for itself. So when we think about buying back your time, Brock, when you say cash flowing assets, maybe give an example of something recently, but also talk about Nate's point that we have to be willing to think long term and how your brain thinks of that. Because business owners, for all the reasons I love them, they normally have a hard time slowing down to allow a guarantee of speeding up.
To your last point,
Yep.
oftentimes what you'll see is people have a hang up when it comes to the first 1 to 2 years in a whole life policy where you've got a lot less cash value than what you've put into it. But, you know, if you can't think past 3 years, you probably shouldn't do this anyways. This is
Yep.
a long-term product and most things should be long-term. And when we say long-term, that's like 10, 15, 20 years, right? Getting past 15 years is a little too far just because, we don't know what's going on. But you've got to think longer than 3 years, right? You've got to think through, hey, life is going to change. Things are going to happen. More opportunities are going to come down the line. And while it's important to make the best decisions that you have today, you also need to set yourself up for the most options later. I would say that. Now, cash flowing assets, that is just something that you put money into and then it returns money back to you. So rather than having a return on your money, it has a return of your money. And so the most simplest and probably the thing that most people think about is real estate. You go buy a real estate property, you get a mortgage, down payment, and let's say that, it was $60,000 for your down payment and your mortgage payment was $1,200 a month, but you rented it out for $1,700. Well, that $500 difference between the rent and the mortgage payment comes back to you as the free cash flow, as the cash flow. And that's what creates it as a cash flowing asset, or what we like to call a cash flow engine.
So, Brock, in that scenario, step one, they have a whole lot policy they've been paying premiums into. Now, keep in mind, you can do becoming your own banker and infinite banking through any product. You could do that through cash in a checking account. You could do it through equity and farm equipment if they'd let you borrow against it. You could use your HELOC, a home equity line of credit. We have to recognize that the difference is the location and the ownership and who benefits from the growth and profitability of that environment. All right, so if we recognize that and use Brock's example, Brock, another way that I think about buying back time, and this is back to our point we started with, is if you have that cash flowing asset bringing money back to you, and it has the place to go, premiums, and you've been thinking long range enough where that policy has been receiving premiums for 4, 5, 6 years, does that make your dollar you earned better or worse, stronger or weaker when it gets into a premium with that cash flowing asset coming back?
It makes it a whole lot better, because the way you want to think about it, right, is first off, most people in typical financial planning, the only advice is try to save 10%, chase a 10% rate of return, and then wait 30 years. Like that is the main goal for most typical financial plans. Whereas if you start this wealth acceleration journey, and let's say that you start buying policies and then buying cash flowing assets, as those cash flowing assets start paying back into your world and they hopefully start taking over expenses, you no longer are playing this game of, oh, let me see if I can save 10% of my income. You might get to a place to where you're saving 100% of your income, right? Because the way to really think about it, if we were being technical, what we would actually want is as you save money, you start transferring your free cash flow to your whole life policy, borrow against the whole life policy to buy an asset. As that asset produces income back into your world, free cash flow, you're not having that pay back towards the policy. What you're actually doing is you're using that to pay for personal expenses in your world. So let's say that it was that real estate property and it produced $500 a month. Well, if you're, a family, that could be your grocery bill. Okay. Well, if your earned income is no longer needed to pay for all the groceries each month, guess where that should go? To pay off the policy loan, to reestablish that line of credit, to go back into the policy to start building. And then you do it again and again and again. And every time that you increase your cash flow from an asset, you're just checking off one of your personal expenses. And it could be as little as your Netflix bill, your Spotify bill, like one after the other. You're just stacking wins on top of each other and getting closer to your mountain of financial freedom. And now, like I said earlier, you're playing this game of, 100% of your income going to be invested and then used somewhere else. where everybody else is living in this world of, hey, how can I save 10% of my income?
Yeah, there was something said earlier that reminded me of a conversation that me and Brandon were having with one of our new members recently. And there's times in our lives where we feel a lot of pressure to make a decision in the moment, something like that. And there's this practice that has been perpetuated over many, many years of, hey, take a deep breath. And you take a deep breath, and all of a sudden you get a little bit more clarity about what you need to do. Oftentimes, it's a proven process. It's a proven practice. And so what I was telling her is the way I feel about paying premiums is when I get money into my life, paying premiums it feels to me like just taking a deep breath where I don't have to make any crazy decisions with that money right now. I just get to breathe and gain some clarity and then figure out what I'm going to do.
Yeah. On the premium, one of the things that
Hold on, Brandon, where most people live in a world where they're just trying to figure out how much money they have left over after they spend.
Yes.
And they're hoping that they've got money saved to then go make a decision with.
Yeah,
Some
Where
people forget to breathe.
what most people do in typical financial lives of people is they they how do I want to say this? They automatically invest and then try to save. Where what it should be is they automatically save and deliberately invest.
Yeah. Yeah, and this whole buy back your time thing that we're talking about, I've yet to have a conversation where someone was open enough to keep leaning into tough questions to where they have ever said, I want to work harder for longer doing what I'm doing without any flexibility. I've yet to have somebody go, I can't wait to go from 40 hours a week to 60. And when I'm 60, I want to go to 70 hours a week. When I'm 70, I want to go to 80 hours a week. Yet when you ask them questions, then they are honest. They're like, I don't see an end in sight. And often, not always, but often, it is just a rethinking of their thinking that needs to occur because maybe they already have the energy stored somewhere else and they don't think they can access it or use it, which has kept them in scarcity. And then here's the fun part. When you show them how to use it as another option to accomplish buying back their time, to accomplish being able to travel to see the grandkids more, to accomplish whatever matters to them most sooner based off their behavior, then the most hard thing to do next is overcome the fear of doing something that sounds too good to be true. Because it's not a common conversation. And that is a big piece that comes into the equation for many people that we work with. Brock, I don't know if that happens a lot with your clientele in the same way, but on our end, it happens all the time.
I'm writing a newsletter right now that the title is, Why Isn't Everyone Doing This? And, as I write this, I was looking up some stats, and you've got to go back and understand, number one, the rules of the big three, which you can go back and probably watch a different episode for that one. But you also have to think about like 40% of them, I think it was only 40% of Americans report that they work with a financial advisor. So what that means is 60% don't, which means the masses do not work with a financial advisor. So number one, the marketing is probably all towards those 60% of people that do not have a financial advisor, right? Then the other stats are like 53% of Americans can't come up with $1,000 emergency. Credit cards are like through the roof. Like there are so many like stats. The median retirement savings is drastically away from where it should be. Protection, I think the stat from Finseca the other day was there's $1 trillion gap in protection for people, like what they should have compared to what they have. You have all these. So when you look at the stats of what the masses are, all the marketing, majority of the marketing is for the masses. Well, if you're not in a position where $1,000 is going to crush you and you actually have savings, you're not being crumbled by credit card debt, you have retirement savings, you're able to put money away, you're not living paycheck to paycheck, well, then guess what? You probably don't need to be listening to the marketing of the masses and the information to the masses, because guess what? You're not the masses.
Yeah.
So the advice, if it's different, you probably need to lean into it because you're different.
Yeah. Nate, y'all are going to love this. So one of our clients or members messaged me this morning and they said, hey, have you ever joined this Facebook group? It seems to be a great place that we can share what we've learned and the value of becoming your own banker. And just for a side note, they are shifting from trading time for money to buying back their time with their policies, like Brock talked about, actually with short-term rentals. And it's opened up their portal and their mindset and their brain of like, there's so many more advantages that can come with understanding the world of leverage and utilizing a policy loan to purchase a cash flowing asset that also gives me tax deductions and other benefits tied to the tax code. And a fun side note, some of our clients who don't want to be in the real estate world, but who have sums of money sitting certain places, many of them in cash value, are becoming cash. They're basically cash partners for them to make the down payment in the purchase. And the math is going to send them back more money than they could get with their money sitting anywhere else, just because they have capital they can control. So they're pairing together to create strength in their cash flowing assets. Well, she joins this group, and the title of the group is, and I've been invited to it. I haven't joined it yet. It's in Facebook.
I joined it.
Financial investments and legacy planning. She comments on becoming your own banker and what it's done for their life and infinite banking and how it has changed their ability. Now, keep in mind, she has left the career she was in by choice, and they have cash flowing assets and more peace of mind than they've ever had in less than a year. And she got banned from the group. Now, you tell me why she got banned from the group. Financial planning, financial investments, and legacy planning. And Nelson often said, if, once we know what the problem is, we'll know what to do. And so I'll reverse engineer that. Nate, how many people do you meet who are putting $500 to $1,000 to $1,500 to $2,000 a month into a retirement plan set on auto draft?
All the time.
All the time. How many times in that same conversation, and we're not throwing shade at anybody, we're learning and growing.
Not all the time, but a lot of times.
A lot of times.
Yeah.
How many times does that person also have a credit card that's 29 to 30% interest working against them?
Yep, that happens too.
Brock, do you see that often in your world with business owners carrying high debt while they make high income? And I bet you say something along the lines of, hey, are you getting 30% on your money anywhere else? You ever do that?
No, he just says, why are you doing this?
Yeah, that's what he says. He doesn't give him any details. He said, why? So, Brock, I think it supports your point very well. Why do these things occur? You want to touch on, you just said it already with the percentages and the numbers and the marketing.
Yeah. Well, number one, people just aren't aware, and they're not, people aren't aware, nor are they taking the responsibility to look at it. They're just thinking like, oh, well, if I don't look at it, it'll just figure itself out. Well, I'll not get on my soapbox, but
okay. Well,
yeah.
Flip side. Got a buddy that was playing golf the other day. Brock, you'd appreciate this. And they have had a sale that created a large windfall for them, very large. And I know that's relevant to everybody, but let's just say in the millions, and they are not $1 million earners. And he's followed all the traditional advice that he's been given. And we're playing golf, and we know each other. There's a trust there. This is not some stranger I met off the street. And I said, well, do you have a greater peace of mind or less peace of mind? He goes, Brandon, I'm scared to death. I'm looking at the numbers every day. It's the largest amount of money and it's locked away now. And I don't know how we're going to get access to it. And they're telling me this and I don't understand what this product means and blah, 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 blah. I said, is that what you thought would happen when you sold this property and got this windfall? He goes, no, I thought it'd be the opposite. So I said, would you agree there's a flaw in what you think you should be doing or the mindset related to it? And he said, absolutely. So we're meeting today. Not to convince him not to do what he's already doing, but to go, can we take this windfall and put you in a position to where you can create peace of mind while doing what you're doing? Could it make it better? And that's such an important conversation that, Brock, you just alluded to, Nate, you've alluded to, is that hope and wishing is not a strategy. And let me just throw myself out there. Brock calls me on that when I'm getting offline. So we're not saying we've got it all figured out. As the zeros add to the paycheck, if you have bad behavior, it's just bad behavior with bigger numbers. And so that's an ongoing thing that we always have to work on.
Yep.
So, Nate, anything you want to add to finish up, or Brock?
Well, when you were talking about your buddy, I had a similar conversation with somebody this past week where they had a large pool of cash that gave them a lot of peace of mind. And he said, but I also recognize that that's not going to do very much for me just sitting where it's sitting. And so because of that, he started, talking to an advisor about something that he could do a little bit different. And what the proposal was essentially, hey, we're going to put it in this fund, this fund, this fund, this fund. And I said, well, how'd you feel about that? He said, I did not like that idea at all. And he said, what would we do different if we started working together? Because we're vetting each other right now. And I said, well, the first thing we're going to do is we are going to make sure that your level of peace of mind is exactly where it needs to be. We need to find out what that looks like for you and explore that. And he's like, that advisor didn't say anything about peace of mind. And he's like, I like that.
Yeah. Brock, why is peace of mind, and maybe we can do another podcast on this, but just a little blip. Why is peace of mind left out of the financial conversation so often? Yeah.
What's the 4 rules of the institutions? Get the money on a consistent basis over the longest period of time. Well, how do they keep the money there as long as the longest period of time? Well, get you from making decisions.
They keep it there by fear also, because they're like, hey, if you sell now, you're going to take all these losses, but so you better stay in for the long haul.
No, what they'll probably say is, because nobody's had losses over the last 15 years.
Yeah. They'll show the track record.
You're going to give up all this growth.
Yeah.
You need to stay in it for the long haul.
Yeah.
Brock, I think you brought this back, and we'll tidy up on this and kind of finish up. But I think you were at a conference, lifestyle investor conference. I think you said where many of the guys there said you can't eat rate of return.
Correct.
Is that right? Is that how it said? Okay, I want to be sure. So a lot of times when somebody's showing me their spreadsheet with all their net worth, and I've gotten 18%, 20%, that's great. But why are we meeting? What problem have you not solved yet with your net worth and your rates of return in the market that brought you into this conversation? And almost always it is, how can I buy back or control more of my time to do the things I know I'm supposed to be doing? And when they recognize that, they recognize, well, I may need to rethink my thinking. I may need to be open to a new way of thinking. I may need to begin leaning into, oh, maybe everything that's marketed out there isn't for my best interest. It's for the masses. And then get around people who are willing to challenge you with questions, not tell you what to do with statements. That is a great indicator. We have found, if you hang out with people who always tell you what to do and never ask you why you're doing it, run. I cannot emphasize that enough. because they're telling you what you should do for what's best for them. Almost always. Don't ask me how I know all that. That's a whole nother podcast episode. All right. So what do? We just ask you why you're doing what you're doing. Is it accomplishing what you want it to accomplish? You feel good about it? Is there peace of mind? If that interests you at all, then hit us up. Cashflow Legendz with the We love hearing your comments, your thoughts, even your disagreements. Y'all heard Brock and Nate and I have a point of disagreement. It wasn't really disagreement. It was just seeing something from a different angle and communicating about it to get clarity on it. That's a good thing. So until the next time, we hope you have a blessed day. We are grateful for you sharing your greatest asset with us, your time.